The bullish breakaway pattern can indicate a potential reversal in a downtrend. It consists of 5 candles, a long black candle, followed by the next 3 candles, which are spinning tops with short real bodies. The second and fourth candles must be black to confirm the pattern. Additionally, the second candle must create a gap between the first and itself, and the fifth candle is a long white candle that closes within the body gap of the first 2 candles. This pattern suggests that the bears are losing momentum, and the bulls are starting to take control. The bearish breakaway pattern can indicate a potential reversal in an uptrend. It also has 5 candles, a long white candle, followed by 3 small spinning top candles with short real bodies. The second candle opens higher, creating a gap, and the third candle can be either black or white. Finally, the fifth candle is a long black candle. This pattern suggests that the bulls are losing momentum, and the bears are starting to take control. In a bullish closing Marubozu, the closing price is equal to the high of the period, and there is a small or no wick on the lower end, indicating that the buyers were in control throughout the session with no significant selling pressure. In contrast, a bearish closing Marubozu has the closing price equal to the low of the period, and there is a small or no wick on the upper end, indicating that the sellers were in control throughout the session with no significant buying pressure. Additionally, it's worth noting that bullish closing Marubozu typically have a small lower wick, while bearish closing Marubozu have a small upper wick. The closing Marubozu pattern is a strong indication of market sentiment, and it can signal a continuation of the current trend. The bearish counterattack candlestick pattern is a 2-bar pattern that can signal a potential reversal in a strong uptrend. The first candle is a long and green candlestick with a real body, indicating a strong bullish sentiment in the market. The second candle is a red candlestick, which opens higher than the previous day's close and rallies further before sellers take control and push the price lower. The red candlestick must be equal to or close in size to the previous day's green candlestick. In a bearish counterattack pattern, the red candlestick typically closes near the close of the previous day's green candlestick, indicating that the bearish sentiment is strong enough to counteract the previous day's bullish sentiment. This pattern suggests that the bears are gaining momentum and could push the price lower in the near future. Traders can use this pattern to identify potential short opportunities or to exit long positions. There must be a strong downtrend in the market for the formation of the bullish counterattack pattern. The first candle must be a long red candle with a real body. The second candle must also be a long, ideally equal in size to the first candle, but a green candle with a real body. The second candle must close near the close of the first candle. The bullish counterattack pattern is a sign of a potential trend reversal, indicating that the bulls may be gaining strength and could take control of the market. The deliberation candlestick pattern, also known as a stalled candlestick pattern, is a 3-candlestick pattern that can occur after a strong uptrend. This pattern is often seen as a sign of indecision in the market. The first candlestick in this pattern will be a significant bullish candlestick. The second candlestick must open above the opening price of the previous candlestick, and it should close above the high of the last candlestick. The last candlestick should have a small body and the same opening price. It can close either above the high of a previous candlestick or below the high, but it should be a bullish candlestick. All 3 bullish candlesticks should form in a specific sequence and structure to confirm a deliberation pattern.